So he exactly issued 6 yuan for 6 yuan worth of bottles. If that is equal, it means there is no fraud here. We call this impress system, which is used for recording petty cash, day-to-day transaction, right?
I have a question. Does
Sure.
the amount on this card, because I think it's a card with a blocked amount.
It can be card, it can be simple voucher or simple even handwritten authorized person. Manager just write it down. 6 milkshakes are needed for the clients or for us. Give it to the PM. PM will go to the voucher person and give that thing to the voucher, and he sees that whether this is the writing of manager or not, and he give you the cash.
So basically, you should have no amount left in this card. Always you spend.
It depends. Sometimes a lot of customers come. Sometimes no customer comes. You still need to spend 6 yuan a day for 3 bottles, right? So you have a minimum amount. Through history, through your comparison business, competitor business, okay, what are their, through your history, okay, normally 10 clients visit us and we have to entertain the 10 clients. So normally some clients want coffee. Coffee is like 20 yuan a cup. Some customers want tea. Tea is just 5 yuan a cup. Some customers want soda, Pepsi, Coke, or some want fresh, milkshakes, fresh juices. So you know that you have history and you find out, okay, per day it's like, not more than 500 yuan. Sometimes no customer come, 500 yuan is still there, but that doesn't mean you have to spend 500 yuan on each day, no. Right? Okay, here we go. Now today's the real agenda, numerical one, is to construct and use a cash budget. So let's take a 5 minutes, I think 10 minutes break, and then we start doing the cash budget. Okay, I'm gonna stop that. Okay, class, welcome back after the break. Okay. Guys, can you hear me? Lota, Dijudi, Nimesh, can you hear me?
Yes, we can.
Okay, good. Let's proceed. So cash budget is basically a financial plan to coordinate business activities. Cash budget, which shows you budgeted or planned both inflows and outflows, receipts and payments. So what are the steps? Number one, we start from beginning balance, right? From previous month or previous year, how much cash we have, we start from there. So we call this beginning balance. So beginning balance, we add all the inflows. So remember, we are constructing budget. So all the items here would be planned, future, right? Expected, estimated, right? So budgeted receipts, and then we subtract budgeted payments, right? So the bottom layer would be either we need new financing or either cash is available for investments. If the answer is negative, it means we need more financing, more loans. It means cash is negative. It means this month or this week or this quarter or this year, we would be needing this much cash. So remember, cash budget is also not a financial statement. So it can be made for 1 day, for 2 days, for a week, for a month, 2 months, 3 months, a year. So you can make accordingly, right? So, so you compare cash available to budgeted cash balance as well. So it means if we have, our budgeted cash balance is like we want to maintain a certain amount of balance. So it means we also need to less that one. For example, the beginning balance is, for example, let's do the example. So you see, we have the example here. So this is the example of Mid-Atlantic Manufacturing Company. So cash balance December 31st, 2013. So that would be a beginning balance. Why? Because we are making the cash budget for 2014, right? So this would be the beginning balance. So beginning balance is, it means at the end of December 2013, our cash was 6260, right? So what will happen next year? Next year we will be receiving from our customers $55,990, right? Dividends on our investment that we receive, not we pay. If we pay, that would be in payment section, not the receipt section. So this is we receive the dividend. Then we also receive some cash from the sale of fixture like ACs, water coolers, it's like that, right? So our total cash inflow in 2014 would be $69,150. So now let's go to the budgeted payments. So we have to pay for inventory. We have to pay for operating expenses, which are include salaries, rent, whatsoever, right? Expansion of store, right? We are expanding stores, right? More, store space is needed, whether you are buying it, whether you are having on rent, whatsoever, right? Payment of the debt, payment of dividends. So all kind of cash inflow. So you didn't see in expenses the depreciation. Why? Because depreciation is non-cash. So the name starts cash budget, right? Cash budget. So everything that involves cash inflow and outflow would be here. Non-cash activities or barter system is not going to be here, right? For example, referral system. Okay, you refer us, we refer you. We cannot record it because no cash is involved. So this is the total payments, total receipts, amount is 3,900. So this is cash available. Cash available. But we said that we will be maintaining our cash at the end of 2014, 5,000. So it means we make a benchmark and we said that at the end of 2014, 5,000 should be in our account, but in our account we have 3,900. So how much less? Our cash is 1,100 less than our expectation of end year balance. So this is simple one. Beginning balance plus inflow minus all the payments and compare your requirements. If your requirement is, for example, here 3,000, it means 900 we have ready to invest, right? So let's do that. So we have an illustration here. So please pause the video and read that. Okay, let's read that. So Kachina Corporation is preparing its cash budget. Kachina ended 2014 with cash of 68 million. That is the beginning balance, right? So managers need to keep a cash balance of at least 70 million. So that is our requirement for next year. So next year our cash must be 70 million. If our cash balance is above 70 million, that we have extra cash. If not, then we need financing, we need loan. Okay, the details are customers, collections from customers are 11,925 million. So that is cash inflow. Payments 6210 million. So that is a negative sign here, right? So Kachina also expects to receive interest payments. Receive interest payments, not pay interest payment, receive interest payments. So some students, they confuse interest payments. Okay, this is maybe we are paying interest. Expects to receive. That is a plus point here. Operating expense payments are negative point here. So that is under payments. And Kachina expects to invest 1922 million in new equipment means it is cash going out, negative. We need to purchase new equipment, payment for new equipment. Debt payments that need to be repaid, that is also negative, 683 million. So company forecast net income 893. This is extra because in cash budget we don't see a net income. Okay, so this is extra amount. But plans to pay dividend, that is cash outflow, right? So let's make the Kachina's cash budget, and remember they need to maintain 70 million US dollar cash balance by the end of the year, and that is their desired one. So let's talk about that. First, we start from beginning balance. So beginning balance is 68 million, right? So budgeted cash receipts. So how many receipts we have? We have 2 receipts. Number 1, cash collection from customers and receipt of interest. So you add all these 3 will give you $12,008 million. So remember, the budget is in millions. And now all the payments. So we need to purchase inventory, operating expenses, equipment payments, debt payments, dividend. So we add it, right? So how much cash available? This is a positive one. It means this is the cash available. Our inflows are greater than our outflow. And what is our budgeted cash balance for desired balance at the end of 2015? 70. So it means $22 million is ready to invest wherever, whether you save it with the banks, whether you purchase stocks in the stock market, whether you use that $22 million to expand the business, to acquire some business, small businesses, whatsoever. Right? Florian, understand? Ali, understand the cash budget?
Yeah.
Fabian, Coco, Dijodi, Wusion, Nimesh, Kathleen?
Yes,
Right?
sir.
Fairly simple. All you need to do, only force to just follow the 4 steps. Number 1, beginning balance. Number 2, cash inflow. Number 3, cash outflow. Number 5, you need to see your requirements. Your desired requirement. Your desired requirement here is to maintain $70 million. So then the end result would be either you need additional investment or additional finance or additional loan needed, or either this is the extra amount ready to invest somewhere else. Right? Here we go.